Good evening, everybody, and welcome to our session for today. My name is Edwin, and joining me today is James Mbogwa. So today we'll be looking at UT 100 index and how it's constituted and the analysis based on how the technicals are. So James, perhaps you can say hi before we begin.
Hello, everyone. My name is James Mbogwa, and I'm happy to be in the session.
Excellent. So I'll jump straight into it.
Yes.
So UT 100 is the code for NASDAQ 100 on our trading platforms. And it is a stock index of 100 largest companies trading on NASDAQ exchange in the US. So it basically serves as an indicator of the overall health of technological sector in the US economy. So the index basically excludes companies in financial services, commercial and investment banks. So it's heavily constituted by companies that manufacture basic materials, consumer discretionary, consumer staples, healthcare products, industrials, technological goods and services, as well as telecommunications services and utilities. So companies included in this index are some of the largest companies in the world, and such companies include Microsoft, Apple, Amazon, Tesla, Meta, Nvidia, and many more. So how are UT 100 constituent companies selected? So, or what determines which companies are going to be enlisted in the index? So the first thing is that these companies can only be common stocks, ordinary shares, and tracking stocks. So those are the stocks which are eligible to be enlisted in UT 100. So the stock must also be listed on the NASDAQ stock exchange. Only non-financial companies can be part of the index. So financial services companies are not included in this index. They're included in S&P 500. So the stock must also have a minimum average daily trading volume of around 200,000 shares. Then the last thing is that the stock must have traded for at least 3 full calendar months for it to be included in the index. So these are some of the examples of companies which are included in NASDAQ as at 30th June 2023. So I've just highlighted a few. So we have a total of 100 companies, so we could not include all of them. So we've just selected some of the common and some of the largest companies in the world. So these would include Microsoft Corporation, Apple Inc., Nvidia Corporation, Amazon, Tesla, Meta, Alphabet, Broadcom, and Pepsi Incorporation. So why would a trader be interested to track the performance of UT 100? Or what would draw you towards trading this particular index? So the first thing is that it has served as a barometer for the US large cap tech companies. It is also one of the best performing indices over the last few years. So if you look at the performance of NASDAQ versus the performance of S&P 500 or US 500. So in our platforms, S&P 500 is coded as US 500. You will notice that UT 100 was able to outperform US 500 with a cumulative return of 258% against 94% for US 500. So this chart basically shows that performance for the period between early 2009 towards 2021. So that was the relative performance between those two indices. Then the second thing is that earnings reports or company news from one of the main tech companies, some of which we've mentioned above, like Apple and Amazon, they can tend to have a significant influence over the overall volatility of the index, thereby bringing forth opportunities for traders to partake in this index. So given that it has fewer constituents, or the companies constituting that index as compared to S&P 500, then you'd expect for this index to have a bit more volatility. Most technology companies are the driving force behind today's global economy, with products as well as services that they're bringing to make the market, that they're bringing into the market. So if you look at some of these companies like Apple, which produces tech products which are sold all over the world, and it also happens to be one of the largest companies in the US. Companies like Amazon, Facebook, Nvidia, most of these companies were established within the last 20 to 25 years. So these are some of the recent companies, and since they tend to offer services and products which are consumed all over the world, so you'd notice that that is likely to affect this index very much. And due to that volatility, traders are therefore able to find opportunities to trade this particular index. So UT 100 has 100 companies constituting it, and it therefore has 400 less companies as compared to US 500, which has 500 constituent companies. Therefore, it has more exposure with fewer companies than US 500, and it is therefore more prone to have more volatility. So this is just a chart showing how both NASDAQ and S&P 500 have been performing. So the blue line is indicating the performance of UT 100 since late 2008 up to late 2018. Then the purple line is indicating relative rolling volatility within the same period. So from what we are able to see from this chart, you'd notice that from early 2013, NASDAQ has performed relatively better in terms of volatility as compared to how S&P 500 or US 500 was performing within the same period. So we would say that generally, if you had two traders both participating in either of these two, the trader who was trading UT 100 could have had more opportunities and perhaps better opportunities to trade due to that added volatility in UT 100. Now we will jump into the charts just to have a look at how that indexes chart looks like from the platform. So I'll have James sharing his screen just to give us a sense of how the index is at the moment and opportunities that are likely to emerge towards the end of this week, or as we progress towards this week. So James, over to you.
Hello, everyone. Thank you. And I'll be showing you UT100, that is NASDAQ. And when it comes to the market, there are normally technical analysis that we normally do, like we identify a reversal or a continuation channel. And what I saw from my view was I saw an ascending channel on the daily time frame. That is, it is more visible on the daily time frame. Give me a second. So if you're able to see, we have been bouncing off from this trend. This was an uptrend. We did the first touch, second touch, a third touch, but when we came for the fourth touch, we went out of that channel. So that means we broke out of a certain ascending channel. So when we break out of outside an ascending channel, that means we are able, or we are having a high possibility of changing the trend. And that means I'm expecting it, at least it might continue to these prices of 1426 3.00, and also if you're able to draw or to have a channel, a clear channel that you will refer while you're taking your trades or while you are doing analysis, there is a certain channel that I've told you, it is an ascending channel, and you're able to draw such a, you're able to have such a channel on your MT5 or MT4, and we broke out. So I'm expecting at least we might have some reversals to 14,908.75 for the market to do a retest. But once you're doing your analysis, you must have another option of doing of anticipating the next move. So I also have a certain channel that is a continuation triangle channel. When you still on the daily time frame, there is also another continuation triangle channel that is at these points. We have been having rejections once we come at this trend line. This one, we have been creating lower highs. And also when you see at these points, these ones, this might be our most important key levels or key points for us to identify what the market might do next. And I'm expecting at least we might also come back to this trend line, this one that is normally creating a lower lows. And yeah, also my other analysis was that we are also going to have some, you see here, when we had this rejection or this doji candlestick or indecision. So at this point, the market came at this point and it was rejected. And you can see the move was very aggressive up to a certain, up to the previous trend line. And so I'm expecting it, at least it might come to 14,553.25, so that at least we might continue to the upside.
I see.
Yeah.
I think I tend to have a similar sentiment as you do. So maybe I can try to share my screen. Or do you have something else to add, James?
I wanted just to add that you see the area zone that if I draw on the inside, like I'm drawing like this. I don't know if you're able to see.
Yeah, I can.
The market came at this point. It was rejected as the second point, and the third touch. In most cases, the third touch seems to be a lot of an aggressive move. That if it was on a downtrend, the lower highs tempt to be more stronger than the on the sideways movement. So if you see on the third touch, we came here and we did a rejection, and we pushed the prices to the lowest points, and ever since I guess it was on 14th. Yes, we were able to push this market, and I'm expecting at least we might continue back to that level again.
Okay.
Yeah.
I see. Yeah, I think I share almost a similar sentiment. So maybe I can just try to share my chart.
Yes.
Just to have or to support what you've shared with us, James, and thanks for that.
Yes.
Tell me once you're able to see my screen on your end.
Yes, it is visible.
All right.
Yeah.
Excellent. So from the daily time frame chart,
yes,
looking way back, we would be able to see that this zone seems to have been the area of resistance way back in early 2022, around early March 2022, actually early February 2022. Then the market dropped, rose again around 30th of March 2022. Again, our price was rejected along the same zone. So fast forward, you'll notice that if we go to a 4-hourly time frame, the same zone seems to act as resistance for a number of times. So this was around 16th of June 2023, as well as the period between early July to around the first week of July 2023. It also served it also served as resistance since prices were rejected within the same zone. Then it broke that zone, and over time, you'll also be able to notice that it has been rejected severally on this particular instance, that instance, and again, a price seemed to struggle, dropping back from the upper trend line area. It struggled to break that zone, and once it broke, it's now back towards this area, which is currently serving as support. So from my point of view, my perception moving forward is that should it fail to break this zone, there's a possibility that it might rise back towards 15,200 area and possibly come back to retest that upper trend line. But if it fails to rebound out of this zone, there's a possibility for it to drop to retest 14,250 area, which seems to be the area where the market has been rejected in the recent past. So if you look at the lower marker, the red marker, you'd be able to see that this area has had prices rejected for 2 occasions in late May and early June of this year. So that is my broad perspective as regards NASDAQ at the moment. So it is at a critical area at the moment. So it could be an interesting asset to watch in the coming days. And basically, that's my perspective for today. And I'm just looking at the chat. So I don't know whether there's any question. So I don't seem to find any question from the chat. So that being the case, I think we'll come to the end of our live. So I hope this and what will be discussed tomorrow during Market Snapshot will be of use as you approach trading for the better part of this week. So that's it for today, and I wish you all a pleasant evening.